How's it going, Bros Nation? Welcome back to another episode. Today, I just want to chat for a bit about CLF, which is Cleveland Cliffs Incorporated. I actually stumbled across this stock today, and I saw something promising, and I decided I would share this with you guys. Maybe you find something you can do with it. But before getting into it, though, just hit that like, share, and subscribe so new folks can be introduced to what we're doing here on the channel here at Bros Nation. Now, I did take a little bit of time away, took a little family vacay, but I am back, and apparently I might have some extra free time on my hands due to quarantine. So, looks like market watching and maybe being able to do more videos will be the play until my quarantine is officially over. But for the time being, just to let you know, I am COVID negative, for those that are wondering, so we ain't got to worry about that. Plus, of course, I'm at home, so who cares? Anyway, on to CLF. Now, CLF is currently ranked a strong buy on tip ranks with a prospective price target of $29.62 at the mid-range. Now, on the high end, it's priced roughly around $39, and on the low end is at $24. Currently, it is trading at $19.10 as of this recording. Now, this morning, the stock did see some unusual options activity, according to Benzinga. Now, unusual options activity can be triggered by one of three things. One, either exceptionally large trading volume, which refers to the number of contracts traded over a given amount of time. Second, being the trading of a contract with an expiration date in a distant future, which also marks unusual activity. Generally speaking, when it comes to options, the farther out the expiration date of the contract, the higher the potential for it is to reach the strike price and grow its time value. Now, the time value in this respect is important because it represents the difference between the strike price and the value of the underlying asset. And finally, 3. Out-of-the-money contracts are considered unusual because the contracts are purchased with a strike price that is far from the underlying asset price. Now, buyers and sellers attempt to take advantage of a large profit margin in these cases because they are banking on the value of the underlying asset to change dramatically in the future. Now, with these signatures coming into play, one would be hard-pressed not to at least consider adding this stock to their watch list at the minimum. Its next earnings report date is actually scheduled for this Thursday, July the 22nd. If I were supposedly to run an option play at this point, I would probably play a call option and sell it right before closing on Wednesday afternoon. Why would I do this? Well, here's why. Wall Street right now is expecting a year-over-year increase in earnings on higher revenues when Cleveland Cliffs reports results for the quarter, which ended June 2021. While this widely known consensus outlook is important in gauging in companies' earnings pictures, a powerful factor that could impact its near-term stock price is how the actual results compare to these estimates. Now, the earnings report, which is expected to be released on Thursday, might help the stock move higher if these key numbers are better than expectations. On the other hand, if they miss these expectations, the stock will or may move lower. While the sustainability of the immediate price change and future earnings expectations will mostly depend on management's discussion of business conditions on the earnings call, it is worth handicapping the probability of a positive EPS surprise. Now, considering that I just transferred funds to my Webull account this morning, those funds are not available for options trading at this time. So my next course of action would be to play the long swing trade, which I did. I am playing the long swing trade on CLF, and I purchased a significant number of shares to hold until I reached my target price before selling. Now, CLF does not currently pay out dividends, so once I reach that strike price, I will not hold on to that stock any longer. I will go ahead and sell. I will go ahead and unload CLF. It's just a temporary hold for me. One thing that I am trying to do at this time is I'm trying to clear the clutter in my portfolio, but with all the different stocks that I have plays running concurrently. What I plan to do is hold on to all my dividend stocks, all the stocks that I have plays that are running on that pay dividends. I plan to hold on to them, but for the others that don't pay out dividends, once I reach that target price that I'm aiming for, that I'm shooting for, I'm going to unload them, get rid of them, and wait for the next play to present itself. Now, finally, some of you may be asking about CLF. What is CLF? So here's a little brief overview, very, very brief synapse of what CLF is. CLF is a Cleveland, Ohio-based company that specializes in the mining, beneficiation, and pelletizing of iron ore, as well as steel making, including stamping and tooling. It is the largest flat-rolled steel producer and supplier of iron ore pellets serving various industries, mainly automotive in North America. Again, it is the largest flat-rolled steel producer and supplier of iron ore pellets serving various industries, mainly automotive in North America. So that's CLF in a nutshell. I definitely see long-term potential gains. Hence, like I said, my long swing trade play. I wish I could run an option play on it as well, so I'd be covering both fronts. But alas, Webull only fronts you for swing trades. It doesn't front you on an options play. So I'm just stuck with the long swing trade for the time being. Now, should the company exceed its earning expectations, I do not see why the stock price won't move up between $25 to $30. Now, if it doesn't do it soon, I will hold on to it until it does. That is the good thing about swing trading as opposed to options trading. Options trading, you have an expiration date. Swing trading, the only expiration date you have is when you decide to pull out. And that is not what she said. Now, anyways, that was CLF. That was the play that I saw transpiring or developing today. And maybe, if you see something that's going on, maybe you see that as a play that's going to be beneficial for you, go ahead, hop on it, jump on it, let me know. Tell me how it works out for you in the comment section. Send me a DM, wherever you check this channel out. Also, make sure you can also check out the podcast of all these episodes, all these uploads on our podcast on Spotify or Anchor.fm. Just look up Money Talk Sundays with a Z at the end. You'll be able to find us on a lot of the social media channels, whether it's Instagram, Facebook, YouTube, different podcast hubs. We're there. Just check us out. So anyway, this is Stevie B from the Investment Bros. Thanks for tuning in. Remember to catch the Money Talk Sundays podcast every Sunday on Spotify, Anchor.fm, or wherever your favorite podcast is streaming. And as always, the marathon continues. One love.